All right, Friday, March 15th, 2019. So for all of you new day traders out there, I'm going to show you what kind of trades I take. And I'm going to show you a couple trades today. One that was a good trade I had, one was a bad trade. I'll show you the bad one first because it was the first one I actually took. And I'm going to show you where I made mistakes. Obviously I'll describe the kind of trades that I look for. Because I think new day traders, which I am relatively new, a couple of years now, still learning on the go, the kind of trades that I think new day traders should be looking for because they're lower risk. I consider them lower risk, and you can ease your way into a trading career if you kind of look for these to start. And then once you've built up an account that you can kind of be more flexible with your trades, you can eventually sort of branch out and do other strategies. But I think if you find a good strategy and stick with it, you'll eventually be successful. You just want to master one strategy first, get that down, because it really means a lot when you get that confidence that you can do it. Otherwise, you're going to blow through your account before you even get to the end of the year. So first I want to show you. Well, actually, this trade did pop up in a scan of mine. I'm not sure which one it showed up in. It must have been I guess it was a gapper scan, because if you look at so yesterday it was right here. These are daily candles, and it dropped down big time here. So it must have showed up in my my gapper scan. Actually, I can show if it is here. Yeah, Kirk, there it is. Gapper's up down. It's at the top, high volume. I just missed it. So what happened is it gapped down, but it had a big spike up to start the day, and then it started fading. I see VWAP. This is the purple line is VWAP. Once it broke through VWAP, that's where I should have been taking notice and maybe getting in. That would probably be around here. This is another 5-minute chart. This uses the 8 EMA and the 20 SMA. Those used together are very helpful because if they follow each other nice and smoothly, it's easy for you to get into a trade because there's more predictability. So I probably would have gotten in right around here, 1045, when it started crossing VWAP. Maybe 1050-ish. Get in around 910. Put stop at around 931, 20-cent stop about, and then see what it does when it gets through 9. Because look at that, it went all the way down to below 8, so you would have had over $1's drop worth. So anyway, I did not get into that. I'll show you the trade that I did take that did not work out, and that was OEC, Orion Engineered Carbons, a chemical company. So I'm going to tighten this up a little. So you can see I got in here as a short, and then quickly reversed. I even got in right at where the eventual pivot point was. And this is a mistake that I've done before, but I want to show you why I got into this trade. The funny thing is, this trade showed up on my VWAP bounce scan. I should call it a VWAP pivot. Because it's a little more accurate. And what that scan looks for, I use Trade Ideas, Google Trade Ideas software. It's the best software you can have to trade. It's not a trading platform. Obviously, I'm on Interactive Brokers. This is Trader Workstation. That's the trading software, but Trade Ideas is the scanning software that helps you look for stocks throughout the day to trade. It's the best software out there. So basically, it came up in that scan, which I designed the scan myself. It basically looks for stocks that are down on the day and then coming back up through VWAP. So you can see here that this was down big time, right? And then it started moving its way back up. It tried to get through VWAP, but failed it. And then I got in here as a short. And the reason I got in look at this, 1 bar later, I would have been like, oh no, I'm not taking a short on this. I'm going to take a long. Because this is the kind of stock I look for playing long on my VWAP bounce scan, because it comes up, it fails, but then it breaks it a second time. The second time it breaks VWAP is very crucial. It tells you that the buyers tried to break through VWAP, and the shorters said, no, we're going to control this and bring it down. But then eventually the buyers went out and bring it through VWAP again. That second break, it means a lot, because look, once it broke there at around 1979, it really didn't fail. It had a little tail down through it, but it didn't close below VWAP at all after that. And then it went all the way up to 2023, and it's starting to reverse now. But so this is the kind of play I actually look for every day as a long, and I just got in it. A lot of times when I get in a trade and it goes wrong, I don't even think about going the other way. I don't want to even think about that stock anymore. So anyway, the reason I got in this as a short is because I saw it fail VWAP, and on this 15-minute candle chart, you can see that it was down. You can see it came up to this 10 EMA on a 15 minute. And when it fails that, I thought, okay, 3 red bars, I actually got in right here, but the problem was I got in before this green spike up happened. I got in and it was too far away from this 10 EMA. You'd like to see it hugging it more if it's going to use that as a resistance and move down further, because a lot of times that's what happens. It comes back up, hits the 10 EMA, you can see it stopped right there and start moving down. I figured it's just going to continue here, and it didn't. It spiked back up, and you can see what happened. So I got in here thinking, well, it's starting to move down nice and smooth. I saw this little line here, and I thought, that looks pretty smooth. It's not the tightest movement in terms of like the candle wicks. These wicks are kind of a little messy, but it moved, pretty smoothly that in one direction. And then it was just a mistake, and you see what happened. It kind of pivoted off my entry like immediately after I got in. It was out. I should have reversed my position right here at 1980, and I would have had a long of about 40 something cents. So that was a mistake on my part. I really should have waited to see if the 10 EMA would have caught up to it and it would have used it. One of the things you see here on this 15-minute chart is that if it's going to do that, if it's going to come back up and use the 10 EMA to continue riding down, usually it's not moving this quickly back up and pushing that far down. It's usually kind of hitting its head consistently on that 10 EMA as it's working its way down. This one moved down too far, and I got in right at the bottom and just played me. This one just played me. So it was a bad move. But I will show you a trade that ended up working out well for me, and that was Turtle Beach. So a lot of you got headsets probably that are Turtle Beach made, and a lot of sound equipment. They're here. HEAR is the symbol. So this one showed up on my like Kirkland. It showed up on right here. Showed up on my Gappers Up Down Top list, and so it actually showed up in my pre-market scan too. I have a pre-market scan that looks for stocks gapping in the pre-market. It might not. Yeah, there it is here. So this was really, or had earnings. So obviously, it had earnings. I think after hours yesterday. So you can see big drop down yesterday after hours, and then it continued down today. So I was monitoring this one all day, and this is where I like to use the 8 and the 20 on gappers like this. You can see it came down, right? Worked its way back up, eventually caught up to the 8 EMA. Now look at how it's hugging that the entire way down. So I'm waiting to see what happens when the 20 SMA meets up. There's always that crucial point where they meet up right here. It's either going to flip and come up, or it's going to continue down. You can see it's continued down. Now, I didn't get in here. I'm not sure. I think Interactive Brokers didn't have shorts for this one early on. I'm not sure. I think I tried to get in and I couldn't, and I just forgot about it. But then you kind of see it kind of went sideways a little bit, and then eventually I did get in here. And actually, I'm going to show that one more time. I'm going to tighten it up and show you, because it's a little easier to see when we pull out those giant candles what happened here. All right. So you see how it kind of holds the 8 EMA, and even when it breaks through, it uses the 20 SMA as resistance. So that's why those are so crucial together. Those two, the 8 EMA and the 20 SMA, when used together, are really, really helpful. So eventually, I saw it try and work its way back. It failed, and I got in here, and then it kind of had a nice little smooth like arc up, again using the 20 SMA as a resistance. I got a little nervous. I thought it was going to come back up the other way. It was going to cross, because that's the other thing, is when the 8 crosses the 20, usually means a change in direction, especially when they've been moving together pretty smoothly. But what happened? Big drop down, and then another big drop down. So what I was looking for was, I got in here at the at 1354, and I wanted to get it down to 1332, a 22-cent drop, and I did. And I only took out half my shares right here. And the reason being was because I thought it could get back down to the low of the day, which was 1313. And it didn't. It only got down to about 1321, and then you can see what happened. It came back up, and I got the rest of my shares out at 1330. So I got half my shares at 1332 here, and then half at 1330. But I wanted to take the other half. I was holding out for it to make another drop. Now you can see it's started to see this cross. It's crossed. It might be moving back up. So yeah, as soon as it got to 1332 and it started moving down into the 20s, 20 low 20 range, I moved my stop all the way back up to my first target, which was 1332, a little above that, 1330. And then when it reversed, it hit my stop, and I got out all my shares, the rest of my shares at 1330. So it's disappointing that it didn't continue dropping, but at least it paid off, because I was in this trade for a pretty long time. I got in around 1 o'clock, and I didn't exit my shares completely until almost 2, or I'm sorry, almost 3. So I was in this trade for over an hour and a half. But yeah, that worked out well. And this is the kind of stock where these are easy to find at the beginning of the day, that you can just watch them all day long. If you're a new day trader, you're just looking for gappers like this, because there's a lot of volume moving to this, and that means there's going to be more consistent patterns throughout the day that you can predict. You can actually see how it's smoother, it's moving smoother compared to, say, a stock like, I'll just try and pick a random stock out of somewhere. Like, see how this is like choppy, and it's not as clean looking. So I think there's another one that I was looking at. Actually, this is another one where it broke back up through VWAP and then broke a second time, actually a third time here, and I didn't get in. Anyway, so yeah, so that Turtle Beach short ended up being a really good short, in and out down here, a nice movement, and helped recover some of my loss from the earlier trade. So that's it for the day. Hope everybody had a good Friday trading, and if you have any questions, leave them in the comments, and I will be happy to answer them. I'll see you next week.